Hi friends, today we will discuss what is credit underwriting. So, why underwriting is required? Normally, credit underwriting will be is a step in a loan process, loan approval process. Okay, so when your loan should be approved, one is like depending on the amount, branch manager or regional head should approve. From credit side, credit underwriting, మార్కెట్ అండర్రైటింగ్, రిస్క్ అండర్రైటింగ్, తర్వాత రేట్ ఆఫ్ ఇంట్రెస్ట్ అండర్రైటింగ్, కస్టమర్ హెల్త్ అండర్రైటింగ్, లాట్ ఆఫ్ అండర్రైటింగ్స్ విల్ బి దేర్. సో in this underwriting, credit underwriting will evaluate the customer's credit worthiness. Means what is his income, what are the debits, what are the assets of the customer, what is his repaying capacity, whether he is eligible for this loan. Future, this loan may not be converted as a NPA. He will be regular payee and he should repay the entire loan amount after the certain period, and there won't be any risk for the bank or financial institutions. All these things will be evaluated during the underwriting process. So, what are the types of underwritings? Two types of underwriting. One is automated underwriting. So, in this automated underwriting, pre-limits will be there and pre-ratios will be there, pre-calculated formulas will be there. Based on that, your loan application will be moved from one stage to another stage. So, credit underwriting, they will do the automated underwriting with the formulas, limits, then it will be moved to next stage. In automated underwriting, normal manual process, it takes days, even weeks. But in automated underwriting, within minutes, you can say go or no go, whether we can process the loan application or we can reject the loan application. You can decide in within minutes, you can decide in the underwriting, automated underwriting. If it comes for manual underwriting, so one is few loans, it is mandatory to go through the manual underwriting because customer doesn't have any credit history, and debit to income, it is high because income is less and his debits are more, and he had a financial difficulties in the past. In these scenarios, manual underwriting is compulsory. Even few it is mandatory, few it is optional. So during the manual process, application can be approved or rejected. What are the rules? So underwriting rules and standards are specific guidelines set by the lending institutions. These are different from one bank to another bank, okay, one organization to another organization. So during the credit underwriting, credit score is the critical factor to get the loan approved. So if your credit score is more than 750, then higher chances of getting your loan approved. Okay, and credit history, in your credit history repayment is good, then your loan will be approved immediately. Income, if customer having a, it is a business organization, you'll have a gross income, net income. So what is the ratio between gross income and net income? And whether customer income is less, means loan will be rejected. Always your monthly repayment should be covered with income. Means if your monthly EMIs are 1 lakh, your income should be more than 1 lakh, then only your new loan will be approved. Sometimes what happens, customer may have a multiple incomes, all the incomes will be added and they will be matched with the your monthly commitments and monthly EMIs, then your loan will be sanctioned. Debt and liabilities. So what are the debts, what are the different loans customer has taken with the income ratio, what is the quantity of loan, what is the income. If the ratio is 30%, then it is a good and your loan will be sanctioned immediately, or chances of more getting your loan is sanctioned. Collateral value, for example, some are secured and unsecured. If it comes for the secured loans, collateral value, always your collateral value, it may be house or it may be land or it may be anything, that should be in good condition. If it is in poor condition, your loan will be rejected, and your asset should be in prime location or growing location, then your chance of getting your loan approved more. And always your collateral value should be more than the loan amount. For example, if your loan is 1 crore and your collateral value always more than 1 crore, then only your loan will be sanctioned. What are the steps involved in the loan underwriting? Income review. So, we'll verify whether he is working for a central government or state government, whether he is a permanent employee or a contract employee, everything will be verified in income review. What is his commitments, what is the monthly income, whether he is getting any other income, everything will verify in underwriting process. Debt and liabilities. What are the assets of the customer, in that whether it is invested in a gold or bank deposits or shares, mutual funds or house, land. So, what are his assets and what are the liabilities? How many loans he has taken? What is the loan amount? Everything will be reviewed in debit and liabilities analysis. Collateral evaluation, already we have discussed. Whatever the collateral you have given, whether it is in a good condition, what is the value, whether this value is year by year it is going, then you are in safe. Your loan can be repaid by selling the security. Satisfying the additional condition, yes, need any additional documents, so verify the documents. Risk assessment, after getting everything, whether the risk is there, overall uh, uh, approach, they'll check it. Okay, and that will get a risk clearance also. Finalizing the loan, after getting the entire information, so they'll give uh, they can have a approve, reject or send back, and they can give their findings. So, the employees every 2 years is changing the company, is a risk, or employee is working more than 15 years in a company, so is very stable person. All those things will be written in the underwriting review comments. So, what are the main forces involved in underwriting? One is repayment capacity, second one is capital converting to cash. So, capital can be in different forms. So, how soon it can be converted into cash? What are the collaterals given by the customer, whether these are a good condition, and what is customers credit score or credit history? All these are included in 4Cs. And why do you need a loan underwriting? Yes, to avoid the risk in the future. So, if you are given a loan, you should get a monthly repayments, then only risk will be low and your company will get a decent income and company will get a profit. If more loans are become NPA, then there won't be any repayment from the NPA accounts, then it is difficult to run your business. How banks underwrite loans? So, in banks, usually they'll have financial analysts. It may be permanent or temporary employees. They'll assess the loan application and they'll give the approvals. If any risk is there, they'll mention in the review comments. Thank you, friends.